And a lot of people have given me feedback. They say, we hear you're going on a marketing tour. And I'm just trying to get people to buy it on the market because now the price is just horrendously undervalued. But we're going with an analyst. So that means it can't be it can't be an equity raise.
The Financial Survival Network. Now more than ever. The Financial Survival Network.
And welcome. This is Financial Survival Network. I'm your host, Kerry Lutz. We are here getting a much anticipated sponsor update from CEO Arthur Halloran of Trillion Energy. And, well, Arthur, it's great to have you back on the show. I know you've been super busy. It's been really hard to get a hold of you. I guess the first thing, we're talking pre-call. You don't want any money. You don't need any money. You just want people to understand the Trillion story.
That's correct. So people keep saying that we need to do an equity raise. And I say we don't need to do an equity raise. We have the money. Other people will look at our financials and they say, okay, they only got, $6 million or $13 million. The issue is we already bought all the consumables for the wells that we're drilling, the first 7 wells, at least. And that's on our shore base. The other thing is that we're getting production about $1 million now, even at the price per well. We drill the wells. We just got a cash call from our partner, $6.9 million. We'll get another cash call here roughly in March for another $7 million. So people like to have the story. And I wasn't going to bring it up, but it's like penny, the sky's falling. The fact is, you have people are running around saying that we need money. They're trying to convince other people, and we do not need money to do this program. It's and at the least of it is, I have 12 million shares myself. I earned those through sweat and labor. I'm the last person that will take or agree to a dilution equity raise at a low share price.
So let's get back to the good stuff. Drilled 4 wells so far. You're 4 for 4.
That's correct. So we're actually the 4th well right now. We are at about 1,200 meters. So because we moved the rig from Gulick to West Akachoka, and so we have 3 wells totally completed. We have 3 wells with gas pay in it. 2 wells are completed and on production. And this 3rd well, Gulick, we encountered 73 meters of gas pay. We were going to complete it. And like I wrote in one of my dispatches, we have this little called, they're well tractors, and we have access to 5. We were told that 3 would be enough. So we used 3 of the tractors to pull down the completion string, but it turned out that those 3 weren't enough. So we pulled them out. We got on the phone. We said, let's bring out the other 2. So we have 5, and we're going to bring it out by air freight. And with the earthquake in Turkey, we could not do that. So it had to come by truck. And so instead of having the rig sit there, burning up money, doing nothing, we just skidded it over to West Akachoka to finish that well.
Yeah, well, hey, all the relief supplies are going to take priority over everything else, I assume. But these delays, this is normal. There's nothing out of the ordinary about what's occurred, is there?
An offshore drilling rig is a big creature, and there's a lot of moving parts, and a lot of things break and have to be repaired. And this is just your normal, everyday drilling operation. And I mean, it can't be avoided. Things like this happen. And the one thing I'll mention also is that on the Gulick gas field, we had a discovery that was Gulick number 1. That was the old discovery well that we had to reserve. And then there was a prospect to the north of it. And we actually drilled the northern prospect, which is about 600 meters northeast of the discovery. And the reason why we picked that one is because the seismic looked better. It looked like there was going to be more pay, and there was 73 meters pay versus 24. And what we actually did then was we converted a resource to a reserve. And now we have a large pool with 1 well in it. That's the discovery, our well now that's producing. So we can drill potentially, well, at least another one, but potentially 2 more wells in that pool.
Hey, it's always better to be increasing your reserves. In theory, at least in some theory, you're trading to a discount of net present value based upon your reserves, right?
Yeah, that's correct. And like I tell everybody, and I don't think they're getting it, is that there is no risk for the gas. There's no risk about if the gas is there or not. The whole issue is the drilling exercise. So when we decided to drill the Northern Pool, we had extreme confidence that the gas was there, and lo and behold, we got a really thick pay. And I've instructed the GNG from Turkey to redo the AVO on the old seismic model. As you know, we're getting it seismic reprocessed with a guy who has a lot of expertise in it, and we are finding way more gas than I even anticipated. We're finding very good stratigraphic anomalies, pools, all that. So that's the next conversation we're going to have, is basically start getting the message out that there's a lot of gas there.
I always knew there was a reason you picked the ticker symbol TCF, and you're starting to prove it out here, Art.
Yeah, that's right. Trillion cubic feet. There's a lot of gas in that.
That's a lot of gas. That's
SASP,
worth billions of dollars, right? And even at the current price, it's like 2 billion or something like that.
It will be a lot. So an example would be with the new AVO. If we take a look at some of the prospects, and this is not all of them, it adds another 28, 30 BCF. That's our estimate. So now with the reserve, the development locations, the sidetracks, and the new stratigraphic prospects, we're now looking at 100 BCF. So we're still getting $22 an MCF. So that's 22,000 a million. So I can't do the math right now, but that's a whole bunch.
Really, nothing's changed here, except that the story has improved. You know, you got logistic issues, which is totally normal because, like you say, it's a complex operation with a lot of moving parts that often break, and you can't account for quakes. But there's no financing in the offing. So the share structure now, as it stands, is going to stay that way. And we're still getting $1 million a month per well. That 73 meters of pay, obviously, that means that well will produce for a long time to come, as opposed to 24 meters of pay, almost triple. But does that mean that you produce more gas out of it daily and it gets a higher cash flow?
What'll happen is that, again, with the field, they'll keep the well pretty well choked down to be equivalent to the other wells. So like 3 to 4 million cubic feet per day. It's just that the decline rate won't kick in for a couple of months, or maybe like 3 or 4 months. So it'll be like a plateau. So if they were to perforate all the zones, it would produce probably 5, 6, 7 million cubic feet per day. But they're going to keep it choked back.
Yeah, well, you don't want to let the pressure out, right? Because it's a field management, reserve management, right?
That's correct. So it's to do with the back pressure, and they're saying once they get like the 6 or 7 wells in, they'll have a better idea of it. And the other thing I'd like to mention is that there's a lot of panicking going around because they think there's an issue with one well. The fact is that Trillion now is not a one well company. Like you mentioned, we have 4 wells. Soon we'll have 5. Then we'll have 6. People are focusing too much on one activity. They have to look at the whole project. They have to look at how we're going to have the first project of the 7 wells, and then we're now going to put in the sidetracks and the development locations. They focus too much on one well, right?
Well, you have us trained to some extent because we get your weekly drill bulletins, and the ones that you've done already or in the past, we're not even thinking about them. So maybe a little section in that report, wells currently producing, and that would be great to see. And I think we covered all the bases here. So originally you said you upgraded your drill plan for the year, 13 wells. Are we going to be doing 13 now, or is it just 12?
Well, what's going to happen is we will exit 2023 with about 13 wells on production. That's our goal. And it's just that the sidetracks take less days, like it's about 30 to 35 days, depending. Some are 31. And so we'll exit 2023 with 13 wells on production.
And one other thing, we had talked about the replacement value of your infrastructure in place somewhere north of $500 million US. But when you're not producing anything, that infrastructure really isn't worth a whole heck of a lot. But now that you're producing, the value of that infrastructure increases geometrically, doesn't it?
Well, what happens, we had to follow the European depreciation guidelines. So now the value of the facility is about $50-60 million, but we'll also now get value for our wells that we put on. And so that's going to be going on. So the funny story is the accountants, or before in the past, they said when we don't have a reserve report, we have to write off the facility. And so with a quick one stroke of the pen, they wrote off the facility. So I turned around here last week, a couple of weeks ago, and I said, listen, I want that facility value back on. I want it with one stroke of the pen, put it back on. And they're sweating and saying, no, we can't do that. Yeah, I know.
No. The accountants, they take away, they don't give, right? That's called being conservative, right? But there is some type of process to step up the basis of assets. But it's complicated and probably not worth it because it'll make your balance sheet look good, but won't really change anything as far as Trillian's prospects. And that's what we really care about. That's what we're talking about here. Hey, still my full disclosure, still one of my largest holdings, and I'm holding tight. If I didn't have it, I would look at the current decline in the price over the past week or two as a buying opportunity. I hate to say that because it's become such a cliche, but based on what you're saying, Art, with the prospect of substantial cash flow by the end of the year, 13 wells producing a minimum of $1 million a month apiece, and you're up to 150 million annual cash flow there, and substantial, right?
That's correct. Yeah, and also on not this week coming up, but the following week, I'm actually going on a marketing tour. And people, when they hear that, they say, okay, he's doing a marketing to do an equity raise. And a lot of people have given me feedback. They say, we hear you're going on a marketing tour. And I'm just trying to get people to buy it on the market because now at the price, it's just horrendously undervalued. But we're going with an analyst. So that means it can't be it can't be an equity raise.
If you wanted to loan Art money, keep it. If you were looking to buy in a private placement, you better think again. It's not happening. And Art, it sounds like the plan is really falling into place. There's always going to be minor delays, and a few weeks or a month in the scheme of things mean absolutely nothing. In this case, we'll look forward to seeing in the report when those two wells start producing. Literally, within a matter of weeks, we're talking about a doubling of cash flow.
That's correct, yeah. So it's going to be good.
So it's a matter of weeks till doubling, and that's why the story is still so good. I don't put any stock in the naysayers. That's their job, to be naysayers, and my job is to try to separate fact from fiction and make informed decisions and help others make them. So, hey, if you're not familiar with the stock, go take a look at it now. The ticker symbol TCF.V, and on the US, it's TRLEF. And go over to trillionenergy.com, sign up for the weekly updates, and they're definitely informative, entertaining. Art, I'll let you get back to finding us more gas, and we'll talk to you again real soon.
Okay, great. It's been a pleasure.
The Financial Survival Network.